Hello, fellow investors. I have an investment thesis to share with you today. A possible multi-bagger, one, two, three, four, even five bagger. And if you don't know what a multi-bagger means, go search Peter Lynch. He talks about investments that are 10x. Like he calls them a 10 bagger. So today we're gonna review a company called Alpha Metallurgical Resources. This company is a metallurgical coal mining company, which is metallurgical coal is used in steel making. Okay, and this company mainly exports to developing countries such as China and India, which are in desperate need for metallurgical coal in order to produce steel. Okay. And the reason why China and India are the biggest consumers of metallurgical coal is because they don't have the the electric furnace technology, which is supposed to replace the metallurgical coal. The simple reason is because they don't have enough. They actually have the technology, but they don't have the scrap, the metal scrap, in order to use this technology. Okay. In essence, metallurgical coal is a contaminating technology, and the developed world has already replaced it with electric furnaces, which is not yet possible in China and India for the foreseeable future, maybe decades to come, because they simply don't have enough scrap metal to use it. They haven't produced enough steel in the recent decades in order to use the electric furnace. Now, why does China need so much steel? Well, because it has big plans to develop its infrastructure, okay? And basically, they cannot develop their infrastructure without steel. So they are in need of metallurgical coal. They even have a big initiative called Belt and Road Initiative, which is a big infrastructural project which China uh, plans to invest in. Okay, in general, China plans to expand and expand and invest in its infrastructure, and that's a very good news for metallurgical coal producers. Now, the stock price of Alpha Metallurgical Coal is highly correlated with the global price of metallurgical coal. You can see on these two charts, they almost look identical. And the reason is when the price of the metallurgical coal goes up, the revenue of this company goes up because they get more money per ton that they are selling. Okay, so you can see about a year ago, the price of this stock was more than $400, even 450. It almost reached $500 when the prices of metallurgical coal were higher. Right now, the demand is depressed because of geopolitical reasons, because of the tariffs of Trump and other reasons, and also because of a lot of manufacturers that have entered the market. Okay, but in general, this decline in the metallurgical coal price has caused many producers to get out of the market recently in this year, in the past 6 months, and only the strongest and the biggest metallurgical producers, which this company is one of them, can afford to stay in the market. Okay, so now once the small players have gotten out, the the supply of metallurgical coal has declined significantly, which means that we are supposed to see a rise in the price of metallurgical coal, which will affect the price of the stock of this company. Now, this company's balance sheet is very solid. Their earnings report is very solid. For example, if we look at their balance sheet, the last one, we can see that they have very little leverage compared to other companies on Wall Street and in the metallurgical coal industry in general. But we can see that they have total assets of 2,400, which is this is in millions, so it's 2.4 billion in assets, which includes land and mines and equipment, and they only have liabilities in the sum of almost $800 million. So that's not a lot of leverage. That's a strong balance sheet. Now, if we look at the income statement, we can see that in recent years, this company has generated a lot of income per share. For example, in 23, they have generated $51 per share. And if we apply a multiple of 10, which is normal in the market, the stock price should be at least $500. In 22, they generated $82, which implies a stock price of $800. And so on and so forth. They also generated $15. They had losses in the past, but that's because they invested in purchasing mines and expanding their capability of production. But in general, they are expected to return to this kind of profitability, and this will affect the stock price significantly. Right now, the stock price is very depressed. It is $118, and I believe we have hit the bottom of the price because there is a cost in the metallurgical coal industry. There is a cost curve. What is this cost curve? This cost curve is basically the amount that costs to produce 1 million ton of metallurgical coal for various companies, global and domestic in the USA. So some companies, it costs them $150 to produce a ton of metallurgical coals. Those companies are long gone because the price of 1 ton has decreased below 150, and they cannot keep themselves sustained. One of the lowest prices to produce 1 ton of metallurgical coal, some companies, the big companies, have a cash cost of approximately $100 to produce 1 ton. So the price of metallurgical coal, in theory, cannot go below 100 in these days. I'm not talking about the past. In these days, it cannot go, it's not sustainable under 100 because nobody will produce metallurgical coal. So I believe we have hit the bottom of the price of metallurgical coal, and we are supposed to see uh, an incline in price, which will affect the stock price of this company. So my recommendation is to buy this stock and expect a very good return of 1x, 2x, 3x. If you are smart and patient, and you can wait this cycle and wait for the stock price to go back up. Of course, I have to say this video is not a financial advice. This is my opinion, and I do not advise you to buy stocks only according to your own research and not some other people's research. Thank you, and we will see you in the future. Thanks for following.